What's going on, guys? So we need to take a look at what's going on with the S&P 500. So today was a really rough day in the overall markets. So much going on in the world with inflation, with interest rates, with Russia, Ukraine. The whole market is very uncertain. We have a long weekend this weekend. You can expect tomorrow to be yet again another wild day in the markets. What I'm actually thinking is going to happen tomorrow is I think we're going to get a nice bounce right off the open, maybe an hour and a half, 2 hours. And then I think we're going to get a harsh pull towards the end of the day as people, and when I mean people, I mean banks, hedge funds, I mean big time traders, not you, not me, not I mean I play 10, $15,000 hands at a time playing options. I'm not a big player whatsoever. I'm talking about people who are betting, hundreds of thousands, $1 million bets on the line. I do not think that these people are going to want to hold over a long weekend with so much uncertainty going on with the Russia Ukraine news, just due to the fact that you can see every single headline that comes across the wire really just either gets sold or it gets bought up extreme and aggressively. So, a lot of bears are not going to really want to leave those short positions over the weekend because they don't want some mega gap up when we come back from over the long weekend. Just like a lot of bulls are not going to feel too comfortable holding positions because something could sway the markets and we can be down in a huge gap down come markets open. So what I want to take a look at here is a couple of levels. You can see we started to base out really here towards the end of the day, and then all of pre-market we kind of based out here right around this 436 level. In the after hours, we did have a nice pump. We are getting rejected at the 20-day moving average. If you guys are not using the 20-day moving average on the 5 minute, on the 2 minute, on the hourly, on the 4 hour, on the daily, you guys don't know what you're missing out on. Everything lives and revolves around the 20 and the 200 when it comes to intraday levels. Now, when we talk about daily levels, it's all about the 5, the 10, the 20, the 50, as well as the 200. But it depends on where we're at in the actual market structure for those other indicators to come into play. For intraday, the 20, the 200 is going to be sufficient enough for you. As you can just see, this orange line here is the 200. This is going to be the granddaddy of them all. I just want to make something clear here. What happens when we hit the 200 here? We were rejected. What happens when we hit the 200 here? We were rejected, rejected, rejected. So could we get a little bit of a bounce? This bounce would be an extravagant bounce into 447. I do not know if we get back up into this price action tomorrow. However, it's entirely possible. Definitely want to keep that on watch. But the level that I'm looking at for the long side here is 440.83. So I'm going to draw my trend line now. 440.83 is going to give us an initial push to around 442. So for all you day traders looking to take some 0 days to expiration options contracts, you can see here this is acting as a previous level of heavy resistance here. And then when we did finally break above it, we came back down, tested it as support, and broke higher. Guys, technical analysis works. Forget about the news. Forget about what someone said on Twitter. Forget about what you read. Just look at the charts and look at the price action. Draw yourself some lines and some squiggly stuff all over your charts and start following them, guys. And trust your gut and trust your conviction, and also respect your stop losses and your risk. It's all about risk management. So what I would be looking for here on the SPY is anything over 440.71. I would be looking to get long for a potential scalp into 442. But however, if we do get rejected and we just consolidate for the rest of the pre-market or after hours and pre-market, and then we get an initial pump, let's say 441, 442, and then we start to stall, and then we start to consolidate, and then we roll over through 440, I will take a short position. I will buy some contracts, puts on the SPY below 440.71 after we get this back test and reject. I want to see us come down here through 440.71, and I want to see us flush out. My initial price target is going to be down here somewhere around 436, so I'm giving myself about 3.5 points of potential measured potential in this trade here. Now, here's where things can get a little bit sketchy. You can see this double bottom that we had here in the pre-market as well as in the regular market sessions here on Monday. This double bottom is going to act as our hard level line in the sand support, and it will act as resistance if we break through. If we break through this level, all hell will break loose for a ton of stocks, because you can expect the triple Q index to also be breaking down significant levels as well. And when that happens, you can expect an aggressive flush. I'm not saying all-time lows, but it would start the leg down back to that previous channel. That's not what we want to see, especially if we want things to get better and more healthy in this market. It's just speaking from a realist point of view here, guys. What I've seen over the past month and a half of 2022, this market is an absolute shit show, and it can continue to be an absolute shit show all year. The market does not have to make a new high, and the market does not have to make a new low. It can stay in this big body range here and kind of just shake and bake you out each and every single day. So how are you really going to make money in the stock market? Well, you're going to have to learn supply and demand, and you're going to have to play the ranges accordingly. We're going to want to be shorting at the supply unless we get some sort of confirmation to the long side, and we're going to need to be covering the middle of the range down towards demand. And when we do get to demand and we consolidate and then we make that push higher, we can feel comfortable for that bounce. Obviously want to cover your position midway to the top half of that range and just kind of rinse and repeat that cycle until this market chooses a clear direction. A lot of you can think that the market is shit. The market has been shit on a day-to-day basis. However, we are not making new lows, so we're not really going into a bear market, but we're not doing enough on the bull side to get into a bull market. So it's a very, very tough trading environment, and stocks are showing that. But individual names are indeed in their own bear market. And if your stock that you love, hold, trade is below the 50-day moving average on the daily time frame and below the 200-day moving average, that stock, my friends, is in its own bear market. You're going to want to short the green days, and you're going to want to buy the excessive downward selling red days when you get some sort of confirmation. Guys, if you're looking to day trade, you want to day trade with me each and every single day live on Discord, where I'm going to call out my watch list and my signals, my entries and exits, so forth, give you kind of market news and training. Join my Discord. That link is down in the description box below. Also, do me a favor. I want this video to get out to as many people as possible. Please give me a thumbs up on this video, as well as subscribe to my channel. I put out content on the daily, and if you're an active day trader or an active swing trader or someone learning to make money in the stock market, you're a newer investor, newer trader, definitely going to want to follow my content, as I'm giving out levels each and every single day on different particular stocks that I'm interested in. I will see you guys all on the next trading video.